Advanced Principles Podcast, or app, was created to be an outlet for like-minded individuals to share in the broader conversations on leadership, retail market updates, and incredible personal success stories. On app, you will hear a collection of stories from the titans of the retail industry, as well as thought and practice leaders covering the spectrum of the economy. Please click the subscribe button and look for the newest episodes to be released. And nobody ever interacts with each other. Nobody gets together. No one shares those war stories or celebratory actions.
We prefer to see the cash yield, the cash to be there, and then you pay it out in dividend.
Either growing my business, buying a jet, buying a condo, taking vacations, adding onto my service drive, whatever it might be.
Turning back to the outlook on auto manufacturers in general on a global basis, because of all those factors, it actually looks pretty positive once they can sort out the logistics.
On this episode of App, we speak with Chris Dalziel from London & Capital, a private wealth management firm based in London, England. Chris is an executive director within the institutional division at London & Capital and joined the firm in 2012 with a regulatory background. Chris acts as a relationship manager for existing institutional clients and is responsible for the development of London & Capital's reinsurance trust business in the U.S. Chris also works with insurance clients in Bermuda and beyond. He regularly travels across North America, meeting with clients and working with insurers to build, develop, and execute bespoke investment strategies. Chris is a graduate from the University of York and holds degrees in economics and law. He also holds the Chartered Insurance Institute's DIP C2 designation and has passed level 1 of the CFA program. Please join me in welcoming Chris Dalziel. How have you addressed some of those questions or comments of dealers just saying, listen, I want my full trust account available to me day one to go out and do whatever I want to with it because I'm either growing my business, buying a jet, buying a condo, taking vacations, adding onto my service drive, whatever it might be. How has that changed or picking up in pace over the last several years for you?
There are different scales of dealers, right? For some dealers that are generating a lot of monthly premium and that their accounts are growing quickly and they're quite sure about the way the F&I products are going to behave in terms of underwriting performance and things like that, there is an argument for actually, why do I need to wait the full 3 to 5 years? Why can't I get at least access to a portion of those funds quicker? And obviously, each insurance provider will have their own view on whether that's possible, whether that's something they can try and accommodate or what have you. I guess it's kind of, from our perspective, we see it a bit like, I think first and foremost, we're an independent wealth management firm, right? So we are conservative by nature. And, from our perspective, we prefer to see the cash yield, the cash to be there, and then, you pay it out in dividend. You can do whatever you want with it. But it is a cash flow issue to manage. And there are a number of options available to sort of to turn the tap on or off or what have you. But I think, our default is, just play the long game, right? If you're going through the hassle of organizing a sort of reinsurance trust arrangement, if you've got a reinsurance business that you've created and think you should be thinking for the long term. Mm-hmm. And for us, long term is, 5 to 10 years at least. And so I think, if you go in with that mindset that actually this is a long-term game and what I want to do is just slowly build it up over time, and compound interest is, often described as the 8th wonder of the world.
Yep.
You've got to give it time to work. You can't rush that. So that's just the way it works.
Yeah. Well, I think that's fantastic. So now with the pandemic, certainly your travel has been restricted. I think the face-to-face interaction with your clients has obviously been missing over this last year and a half. So just an overall summary of how has this last year and a half and the market conditions really affected your business and your relationships with your agents and dealers that you work with on a consistent basis?
Yeah, so I think you're quite right. The lack of travel has really it's been a real shame, and it's definitely been the lowest ebb, I guess, of this crisis. What I'm quite used to doing is getting on planes sort of 10, 12 times a year and coming over to the US and seeing our dealer clients and our agent clients sort of face to face. It's been a real disappointment for me personally that I haven't been able to do that, given I've got three young children at home that I'd love to have a vacation from. But yeah, I think what we've had to do is work a bit harder with the agents, work a bit harder with the dealers, make sure that we're available for Zoom calls and things like that. It's not quite the same, and I'd love to get on a plane tomorrow. Unfortunately, it doesn't seem like the US and UK government have quite agreed a way for free travel between the two countries. But I'm very hopeful that over the next sort of few weeks they'll be able to resolve that. But I mean, I think in terms of the current state of our business, as you well know, the most asset managers, the way they work is they take a small percentage of the assets under management every year that they work from. And obviously for us, we've continued to see new business come along. We especially given dealers have been, flat out selling cars essentially. Mm-hmm. And we've also haven't seen any sustained falls, really, a prolonged sustained fall in the value of portfolios. Obviously, we had that sort of that March to that 2020 sort of shock initially, but it was quite quickly recovered. And by sort of the end of May, early June 2020, we were kind of back to where we were really at the end of February. So in that sense, our business model has been pretty resilient. Like I said, I think the travel and the way we interact with clients has had to change and adapt. I don't anticipate that being a long-term change. And I think it's Mark Andreessen was in the press this week about the fact that remote work is going to fundamentally change everyone's life. I'm a bit of a skeptic. Yeah. I may well be proved wrong. And maybe we'll record this and maybe we'll watch it again in 20 years and see how wrong we were. But certainly from our perspective, our business model is the same. We believe that the best way to create long-term relationships is to surprisingly meet people face to face, to interact with them face to face on a regular basis. And that's what we'll continue to do. But I think for now, you'll just have to hopefully wait until September. And I've got my fingers crossed that we'll all be sort of back in person come the fall.
Yeah. And I'm with you. I think the remote worker, I think there will be a sector that is permanently remote working. I think there's certain job functions, there's certain individuals where it just meets their lifestyle, meets the overall corporate dynamic. But I do think that the majority of the population is going to want to return to the office. It's a huge part of their social life. It's a huge part of the culture of a company. And I think one thing that has been exposed is that companies have a very difficult time creating long-standing positive culture when all the associates are in-house and they're every day and can interact. And to do it over Zoom calls is almost impossible. I can't imagine a 3 or a 5 or a 10-year run of a great culture company and nobody ever interacts with each other. Nobody gets together and no one shares those war stories or celebratory actions. So I do think that the remote worker, for the large part, is going to be temporary at best, and the excitement and luxury of it will wane. So total agreement there.
Yeah, and I'm sure there's a place, right, for balance. There always is, and everything in moderation and all that kind of stuff. But I think, to your point, it's the software introvert software developer who's going to be coding in the corner. I'm sure he was delighted to work from home forever. But I think for those of us in the real world, I guess, who have to interact with clients and explain what we're doing and all of those kind of things, I think, face to face, you really can't beat it. I think you're going to struggle to compete if you're not willing to do that.
Yeah, absolutely. So one of the things that has really surprised me over this last year and a half is globally, the economy should be just completely tanked. So many people are out of work. So many businesses were forced to close. Travel, recreation, leisure, tourism, all those industries basically just wiped off the face of the map within a matter of weeks. The restaurant industry, cafes, coffee shops, all the little local social icons were forced to close for an extended period of time, some longer than others. And yet you see it. And the markets are at all-time highs. Spending is crazy. As you said, the dealers are selling vehicles flat out. It's just, where is this all coming from? And then how does this kind of change? And then it wrapped up in that is, in all actuality, where do you view the health of the U.S. consumer as we continue to play this thing through?
Yeah, it's a big question to unwrap.
It is a big question.
And
yep.
There's a lot of unknowns in there that, we can't pretend that we have a crystal ball, but we have our own view on how this stuff is shaking out. But yeah, I think you're quite right. You go back to March 2020, obviously the doomsayers were completely out in force. I think we would hold our hands up and say, look, we're probably too pessimistic about how long it would take us to recover from this stuff. I think what was unexpected was really the duration and the severity, I guess, of the lockdowns that we saw across the developed world in particular. And because of that, the governments had to step in a huge way. So I think when we talk about fiscal stimulus, we're talking about how much government is spending to try and ramp up the economy or ramp up economic activity or what have you. What we saw last year was essentially consumers not able to contribute to the economy. So, or certainly in the way that you usually do. So 70% of the US economy is driven by the consumer, how much money they're spending at restaurants, how much they're buying, how many cars they're buying, all this kind of stuff contributes to GDP. And what we saw was that level of contribution had to fall significantly, and so the government has kind of replaced that. Really, they've not necessarily boosted where we were, but what they've done is they plugged the gap. And so with that dynamic in mind, what we obviously saw were a lot of people out of work, but essentially being supported by the government, be it through direct checks or through unemployment support or what have you. That was true in the US, that's true in the UK, that's true in Europe. That was true globally in terms of any country who was able to step in and support their citizens. They absolutely did that to a degree that we've never seen before. I think one of the reasons, obviously, why we saw the US stock market do so well is because the stock market is very much a forward-looking indicator. So it's already looking to 2023, 2024. What's the economy going to look like then? How is the stimulus that the government has been putting in 2020 and 2021 going to affect earnings and all this kind of stuff? And we're starting to see that come through already. So, when the stock market 6 months ago was rocketing away, everyone was a bit perplexed. But at the same time, here we are in 2021 and earnings have been phenomenal. They've absolutely recovered. They've grown. And what's more, everyone's had free money. All the corporates have had free money. So if you look at the balance sheet and the sort of the health of US corporates and global corporates, everyone's in rude health. There's been a lot fewer bankruptcies. There's been cheap money, be it through the capital markets or through government loan schemes or what have you. Those go and a lot of those corporates have been able to save a lot of cost because the government have been paying their wage bill. So they've got a lot of cash on their balance sheet. For the big public corporations, they've pushed out their debt profiles, so they're not paying as much interest as they used to. They've taken advantage of the low interest rate sort of environment, and investors are valuing growth a lot higher because the interest rates have shrunk, and so the time value of money becomes a lot smaller, and so investors are essentially willing to pay a lot more for projected earnings that are going to happen in 2024 today. So that's really the dynamic of what's happened in the capital markets, I think. In terms of the state of the US consumer, I think there's really two things that are important for the US consumer, which is essentially their income and their wealth, right? So income is all about jobs and unemployment. So job openings are growing now in the US. Unemployment is shrinking. I think one of the concerns is that there isn't as much sort of participation, I guess. So, participation rates in the US are relatively low. And I think that's contributing to the sort of the unemployment number, in the sense of the unemployment number might look a bit artificially low. But we've only just seen, restaurants and things like that in some states open up. And so, there is a lot more room for new job openings to come in. And hopefully those job openings that are available will start getting filled relatively quickly once the furlough schemes start to roll off dramatically and things like that, which again, we're already seeing certainly over in the UK over the summer. And I know in the US as well, those furlough schemes will be rolling off. I think from a wealth perspective, I think I saw a headline that talked about the fact that, the US consumer debt has never been bigger. But those headlines are really quite deceiving. I mean, when you drill into the details, you realize, well, actually debt servicing numbers is very low because interest rates are very low and people are paying less on their mortgage. They're paying less on their credit cards, whatever it might be. But also net assets are all-time high. So, there's two sides of every balance sheet, and debt is just one side of it. Net assets are all-time high. House prices have been growing strongly across practically every metro area in the US. And consumer confidence is high. Again, stuff like stocks going up, the crypto boom, all this kind of stuff adds in a way to good feeling, even if you're not necessarily directly exposed to it. And certainly a lot of consumers in the US do have, a meaningful exposure to US stocks. So yeah, rude health, really. The consumers in the US, the consumer is in rude health, and no doubt you agents and dealers are certainly seeing that on the shop floor.
Yeah, and it kind of leads me to my next question, almost to an extent that's going to cause a secondary crisis here, certainly with the chip shortage. Driving, I don't know how the sales volume has sustained over these last 3 months. I'm now driving by dealerships and seeing 6 or 7 cars on a lot where they're used to having 200, 300, 400.
Wow.
But somehow, some way, dealers are still selling vehicles at record volume, and the consumers are in somewhat of a frenzy and just really buying whatever they can get their hands on. And it's not just automotive, right? I mean, we obviously service power sports and RV dealers. Now we're getting in the golf car industry. All of those are experiencing record highs. In fact, I saw something that the RV industry is 80% sold out through the end of 2022. And I think a lot of people have taken the personal vacation idea and got an RV, got a travel trailer. Certainly the dirt bikes and quads and side-by-sides are record highs. I know boats are at an all-time high. Golf cars are selling at record pace. So it's not just isolated the automotive industry, but now the secondary crisis is beginning to occur where manufacturers can't keep up. So, where do you see the health of the U.S. auto manufacturer? I know that they're selling a lot of vehicles at record profit. But certainly the volume has got to slow down because they haven't been able to produce the vehicles. There's thousands of cars sitting on lots waiting for chips. So where do you see the auto manufacturers, the US based, the big three, from a stock value standpoint and then an overall health standpoint as well?
I think, I think I can't comment too much on RV manufacturers, but I can imagine that, all those, that glut of sort of vacation savings is obviously heading their way into RVs. No doubt Instagram and hashtag van life and all this kind of stuff has also helped their business. But I think, like you said, every agent, every dealer listening to this podcast, absolutely acutely aware of the fact that overall industry production is under pressure. It's running behind where it needs to be, given this chip shortages and the sporadic factory closures and all this kind of stuff. And obviously, unsurprisingly, beyond chips, we see supply chain shortages kicking in all over the place with lots of other inputs, which is also sort of compounded the issue, I guess. It seems like most of this disruption is fundamentally attributable to sort of the global logistics demand surge that we've seen and the disruption as well. And that's definitely the fly in the ointment for today's manufacturers working through those issues. I think that said, though, as you said, all the data suggests that this year has actually been a booming year for the auto sector in general. The US consumer has a seemingly insatiable appetite to buy autos, even at the higher end of the market for both used and new vehicles. And that's been reflected in the pricing that you've started to see come through. But, list prices have gone up arguably margins might have even crept up for the manufacturers despite these supply chain sort of issues. And many buyers have, of course, turned to secondhand, used cars to replace those existing vehicles, bidding up those prices there. And no doubt you'll know that, in April, we had this kind of this higher than expected CPI, Consumer Price Index, inflation number come through, which was 4.2% growth year on year. But used car prices were actually the second biggest contributor to that number. So used car prices were up 10% in April alone. They're up 20% versus, April in 2020. So demand is really being supported by what we're talking about: government checks, excess savings, all of these kind of unusual factors as well, like car hire companies who obviously pushed the button far too early on selling their fleets. And now they're trying to rebuild them with used cars. They're trying to essentially buy back what they've already sold. And I think there was probably a word of caution in that, consumers, there is some sentiment, I guess, that consumers might remain a little bit more price sensitive going forward. And I think some of the recent sales data, does suggest that perhaps there's a bit of a plateauing and maybe there's a risk of contraction. No doubt those sort of higher price tags have had an impact there. But turning back to the outlook on auto manufacturers in general on a global basis, because of all those factors, it actually looks pretty positive once they can sort out the logistics. I think with employment gradually normalizing towards pre-pandemic levels, which I suspect is a journey that we're going to go on for the next 18 months or so, that will allow households obviously to take advantage of the fact that they've still got those higher savings rates. Typically, when you see these big crises, you see households savings rates spike up and then come back down, but stay above an elevated level, above the average level for some time. So not only do they have that existing savings pot, they're probably still saving more than they might have been looking at 2019 numbers, for example. And obviously, we're still in a very favorable financing environment. So in that sense, you'd expect sales to remain pretty resilient. Mm-hmm. And obviously, the prospects in the more sort of profitable sort of light truck sectors look increasingly bright, especially in the US, of course, where industries are like and corporations and commerce are likely to benefit from the recently announced sort of infrastructure spending bill. I know that there's still undecided how that's going to actually land, but we're going to get something, right? Sure. And I think we're going to see a lot of construction firms and things like that benefit from that. I'm sure, and I'm sure in turn that spend will help US manufacturers. I think from a balance sheet perspective, most auto companies were able to raise liquidity levels over the past 15 months pretty comfortably, and they've raised them to historically unusually high levels. So those cash balances are largely being maintained due to those sort of the strong, I guess, trading environment that perhaps was a bit of a bonus. And debt levels look manageable. Like I said earlier, they've sort of, like a lot of US corporations, they've pushed out their maturity profile on their bonds. So that'll help to bolster their cash positions. They're paying less in interest income to their bonds than they were a few years ago. And even if you look at someone like Ford, where they did get a bit of a rating downgrade from investment grade to high yield, it hasn't really had a large impact on their balance sheet at all. So across the board, I think the targets remain in place at that corporate level to bring their balance sheet leverage down lower over the coming quarters, which will help. But yeah, I think they're in really strong health. And I think the other point that's worthy of mentioning is looking at that transition between ICE vehicles and EV, mm-hmm. and obviously all the big car companies are spending a lot of money in that transition. Consumer adoption is still small. It's clearly growing, and the manufacturers are spending a lot of money to try and future-proof their businesses. But if you exclude, the smaller pure play manufacturers like Tesla, the global order of readiness is probably that someone like VW at the front. They seem to be spending the most amount of money getting ready. They also seem to have, I guess, jumped out of the blocks with a few more models sooner than some other global players. GM isn't far behind though, I think, and of course Ford have recently released at least announced the number of EV
Yeah.
models that I'm sure will be incredibly popular if they can actually churn up the volume. So chip shortages, forgiving. So I think if you look at the amount of capex they're spending, I think I read as of last year, it was between those three manufacturers, it was 150 billion over the next 5 years, which VW's commitment to spending on EV sort of ramp up, I guess, over the next 5 years is greater than GM's market cap today. Oh. And GM and Ford's commitment is more than Ford's market cap. So these are very, very big numbers. And obviously, rightly or wrongly, the manufacturers are absolutely thinking this is an issue of survivability here. This is we need to try and transform, I guess, quicker than perhaps they had expected. But those initiatives are pretty well taken by the debt markets, and record issuance in the US from corporations into investment grade bonds. There has been record issuance. There will continue to be strong issuance and importantly strong demand. So certainly there's no shortage of buyers for that. And so I suspect we're going to see more announcements. We'll probably see it ramp up even further, I suspect, over the next few years.
Yeah. So certainly a lot of uncertainty both in the financial markets, the automotive markets, the retail industry. But one thing is certain: it's going to continue to change and evolve. It's such a different business. That I joined over 26 years ago. It's going to look very different when my son is my age, but the dealers will continue to adapt, to continue to evolve, and continue to succeed. There's no doubt. So what does the future hold for London and Capital and Chris?
So I think, from our perspective, we're absolutely focused on making sure that we keep our clients happy, that we're able to deliver, investment solutions that work in the different markets that we operate in. And like I said, like we've discussed before, certainly the reinsurance market is a really a cool one for us. I think it's from our perspective, what I'm keen to do is sort of get back to normal, really. And I think if we spoke in 12 months' time, if I was able to get on a plane 5 or 6 times, I'd be a very happy man.
Yeah, very good. Very good. Well, Chris, we've really enjoyed the conversation. We're going to end with a little bit of fun here. We're going to go through some very fast, quick hitting questions, a little bit more lighthearted, not as heavy about debt servicing and U.S. consumer confidence and everything else. So, so what's the number one thing you like about America?
Great question. Probably the food. I think I would probably opt to go for the food and the weather, of course. In certain areas of the country.
In certain areas, certainly certain areas. There's other parts of the country which are just like England, but certainly okay. So the food, I like that. So current Top Gear cast or prior Top Gear cast?
You know what? I'm a big fan of the new Top Gear cast. Okay. I must say, Paddy McGuinness and Flintoff in particular, they do crack me up. So I think I'm going to have to go current. Current.
Wow, you are in the minority on that one for sure. Very.
I enjoyed Top Gear years before as well. Don't get me wrong, but but I think they've injected new life to it. So
yeah, that's good. Well, it took them a few years to find some stable footing after the mass exodus.
Yeah,
but it was good. So what's one of the biggest misconceptions you consistently have to overcome about being British?
That I don't know the Queen personally, I suspect, or something along those lines. I think, probably the size of our country. I think we're often seen as quite small and regional, but we like to project ourselves as a global power. So there you go.
I want to be the global power, right?
Yeah, a long time ago.
Not all that long ago.
Yeah, it was just been Independence Day, so maybe we won't go over that.
Yeah, no kidding. So the best place in London for fish and chips and a pint?
Well, that's actually just down the corner from our offices. So it's a place called Giggs Fish and Chips, and it's literally chips. It's literally a 3-minute walk from our offices. So any dealers and agents, if you're in London, I'll take you to fish and chips. Come to our offices at the same time. It's a winner. And there's a few very old pubs around here that date back from the 1500s that I can take you to as well.
Wow. So I've been to Hung, Drawn, and Quartered.
Okay.
Down in kind of central London. That's fantastic. Yeah. And then the pub right across from Parliament. where I've had some fish and chips and some HP brown sauce.
Excellent.
And enjoyed
So
it thoroughly every time I'm there. So
that's the extent of our food culture. Yeah, that's the extent of our food culture. So
peas and mash. Okay, so have you grown tired about questions surrounding The Crown, the series on Netflix?
You know what? I'm the same as everyone else. So I'm on Wikipedia watching it the same as you guys would be. So I've learned a lot. I think there's a fair bit of dramatization, but I think there's a lot of seed of truth in there.
Yeah, it's an incredible series. It's certainly one that has kept me captivated. And
it is interesting to watch.
A lot of people that I run into are talking about it. So the final question then, a little bit of fun, and I know you've bounced back and forth. You normally take 10 to 12 trips over here. You've lived here. So any mishaps from driving on the wrong side of the road, either when you return home or on one of your travels over here?
Now, I learned to drive in Florida, in Miami. So you can imagine that when I was 16, I got into my fair share of accidents.
Sure.
But beyond that, you know what? I'm pretty good, actually. I think it's only on the real red eyes where I try and drive out of the parking lot on the wrong set of barriers or whatever. But that's the worst of it. So I think I've gotten away scot-free so far.
Yeah, that's good. I think one of the worst things that can happen is a roundabout immediately exiting the airport. It's in the UK or in America for anybody that gets off the plane and they're used to driving on the other side of the street. And then you have to face that first roundabout, and whether you go left or go right, that's a big decision of how
it's a lot to think. It's a lot to think about after you've been standing in an immigration queue for 3 hours, isn't it?
Right, exactly. Well, Chris, we really enjoyed your time today. I appreciate the insight on London Capital, the global markets, the state of the U.S. auto industry, a little bit of background on yourself, and I know that our listeners are really going to enjoy it. So thank you so much for your time. We really appreciate it.
Great. No, thanks for having me, Ryan. I've absolutely enjoyed myself, and hopefully I'll be back on at some point.
Yes, we definitely look forward to having you back on. Thanks again, Chris. I really appreciate it.
Great. Thanks, Ryan.
Bye now.
Hey, everybody. This is Michael from ADS. Myself and the entire team like to thank you again for listening this week. And a special thanks to Chris for sharing his knowledge on the current markets and where he sees everything headed for the future. Next week, we have a true industry game changer. Jonathan Lucenay, the founder and CEO of Client Command, will be joining us. He will be speaking about his passion for the automotive industry, how he was able to guarantee sold units for his dealers, and the amazing company culture that is visible throughout Client Command. App is available through Amazon Music, Apple Podcasts, Google Podcasts, iHeartRadio, YouTube, and our website. Don't forget to hit the subscribe button to be notified of the latest episodes.